All right, so vol-wise, realized vol absolutely exploding. Obviously, 25% in a week is pretty unbelievable. So realized vol 10-day going from around 40 up to 70. Ethereum lagging behind a little bit, but realized vol ticking up in the last day or two as well. So that's in the 60s as well. Obviously, implied vols getting dragged up as well as you'd expect. Bitcoin vol outperforming. So you can see carry wise, we don't have that much positive carry in Bitcoin as that red bar shrunk. We have still got quite a lot of positive carry in Ethereum with that implied realized gap being a little bit wider, as you can see there, as compared to that one there. So that is suggesting that the gamma sellers would still be looking at Ethereum potentially as a better gamma sale. We did see an implied vol pop of about 15 to 20 vol points. That's pretty chunky. But like I said, the gamma selling candidate is probably Ethereum right now if Ethereum doesn't start going berserk to the upside like what we've just seen in Bitcoin. But lately, if you've been selling gamma on crypto, you have not been having a good time, particularly on Bitcoin. And so I don't know what the appetite's going to be like for these gamma sellers if they kind of need to de-risk a bit given what's happened, and maybe some of them have been stopped out and won't be coming back in a hurry. I guess that remains to be seen. If and when these markets calm down a bit, we can see if the gamma supply comes back in. All right, but anyway, taking out all-time highs, I think is likely to create even more retail FOMO in Bitcoin, and that is potentially going to keep things fluid. So volatility is likely to stay high regardless of what direction we're going. And then we've got a few macro catalysts this week, ISM, NFP, our PAL speaking as well. So all these things in the mix, but like I say, crypto really moving to its own beat, doesn't really care so much for what's going on in macro land. So it's more the flows. It's more the flows that are going to drive things, and these flows are very one-sided right now. Okay, in terms of term structure, we got, as you would expect, an inversion, a deeper inversion. So we've got the front end spiking the most, back end spiking less, but we're talking about 20 to 30 vols in the absolute front to about 7 or 8 vols in the back there. So pretty big repricing of vol just across the entire curve there. Crypto vol reminding us what it can do. And, you know, remember a month ago, we were in this contango shape with the front end at like 30, 35. That's gone from 30, 35 to 80 in the space of a month, right? That's a more than doubling of short dated vol. Just goes to show, you know, how dramatic the repricing has been in just a month. And that is in a month where obviously February, we had more than a, 20,000 point move in Bitcoin, basically. Okay, call skew bid across the curve as well, much more in the front as the front had kind of normalized to about flat, but it's catching a bid again as you'd expect. Ethereum shape of the curve, similar story, not quite as much, but not far behind. About a 20 vol increase in 15th of March expiry. Back end, similar sort of story, 6 or 7 vols. Call skew going bid again. Actually, back end call skew coming in a bit higher than Bitcoin. We've got 6 vols here versus about 8 vols in the back of Ethereum. So that's interesting to see that you've got more call premium in ETH, even though ETH wasn't rallying as much. Although in the last day, ETH has outperformed by about 5 or 6%. So they're just kind of passing the baton back and forth to each other, Bitcoin and Ethereum. Bitcoin obviously has the inflows that are driving it, but then after it moves up enough, it calms down a bit, and then Ethereum has a little bit of a catch-up leg, something like that. That seems to be kind of how we're doing at the moment, the kind of tug of war that is going on between the two assets. All right, so that is what we're seeing on term structures. If we then look at the relative value spread between the two indices, it did shift lower back towards 0. So we've got a curve now that goes pretty much from 0 up to around maybe a vol in 3-month maturity, but that's it. It's a very flat curve. That kind of makes sense given that the realized vol has been massively in favor of Bitcoin, about 14 vols over for Bitcoin. So it's kind of dragging the spread back towards Bitcoin premium. If Bitcoin's volatility persists, like what I'm saying, if we do get silly moves on Bitcoin and we go through 80K, through 100K over coming weeks, then this is going to stay like this in the Bitcoin Bitcoin realizing over Ethereum. It's probably going to drag this whole curve down a bit, basically, right? So bear in mind that that is definitely a potential scenario if this Bitcoin dynamic persists the way we've seen it. And if I'm honest, I don't really see a good reason why it doesn't persist, at least in the near term. Okay, so those are my thoughts there. The spot spread did pull back about sort of 12% from the local high, but like I said, it has had a decent bounce of 5 or 6 literally in the last day. So it is all over the place right now. We still like the catch-up trade in Ethereum. We do think it kicks in, but we think it might have to wait until after the halving's done, because it seems like the halving is accelerating the inflows on the ETFs. And with that flow dynamic in place, I don't really think there's a lot of edge in trying to assume that Ethereum's going to outperform. It's certainly not showing us that it can do that for any sustainable period right now. Call switch trades that have been short Bitcoin calls have obviously not worked well. Those are trades we were pitching earlier this year. If you remember, we had kind of switched that narrative though and said we think actually it might not be worth selling the Bitcoin calls, just own calls or call spreads on Ethereum. That has been the better trade recently. So you've done well if you've swerved selling the Bitcoin calls. And also relative value in general becomes a bit dangerous, right? If you think about why you do relative value trades in the first place, why do people do pair trades? Why do they do spreads? They do it because they see it as a less volatile version of the trade, right? So if you're buying Ethereum and selling Bitcoin Delta, you're often doing that just because you think in a rising market, Ethereum's going to outperform, but you don't want any outright beta to the asset class. So you want to minimize your risk. When you get crazy moves like what we're seeing now, spreads are not necessarily protecting you from high volatility, right? Because you're getting such wild gyrations in the Bitcoin Ethereum spread, you're not getting any benefit from trading the spread. So you're better off, keeping the trade cleaner and just having outright beta to a market that is just trending so damn strongly that if you believe that this thing's going to persist, you might as well have beta and not try and be too cute with it, basically, right? So I think that does make sense when we're in such high volatile environments. So I've been reducing my risk. I cut half of my call switches in June. I'm probably going to cut the balance actually if things stay quite as volatile as they are. Obviously, keeping a few on has helped me in the last day because Ethereum's had a little bit of recovery. But like just in terms of general zooming out, it doesn't feel like the right expression of a bullish bet anymore to be putting that trade on when Bitcoin is just doing crazy stuff to the upside. And it's just going to create this massive FOMO. And I think it's going to suck even more people in, basically. All right, that's where we are in relative value. In terms of the skew, as Bitcoin exploded higher, we obviously got a very strong bid for calls come back across the curve, particularly in the short dates, which had gone to about flat. And they do give you the most leverage to the upside, right? Because you keep the lower the premium, the more leverage you get. So the shorter the expiry, it makes sense why if you are playing a breakout to the upside, you're going to be using those sort of calls. Ethereum skew having similar moves, but in some cases, larger increases in call skew, as we mentioned. And that's probably because there's less profit taking going on as well. We'll talk about the flows in a minute, but in general, some people who've done really well buying Bitcoin calls in the 60 to 80K range are now actually taking profit on those. So that's keeping a little bit of a lid on the call skew relative to maybe what you would have if you weren't seeing that profit taking. Okay, now, so both assets are kind of settled into about 8 vol call skew in the front, declines to about 5 or 6 in the 1 month maturity, and then rises back when we go to the long end to about 8 vols in Ethereum as well. Now, we do think medium-term risk reversals look amazing from a hedging perspective. So if you have got Bitcoin holdings that you haven't already hedged, obviously I've already hedged. I've been telling you that over the last couple of weeks. Unfortunately, I can't put any fresh riskies on here. But if you haven't done, then you could take advantage of these pumped up vol levels, particularly on the call side and the pumped up call skew, the pumped up funding rates in the futures market. All these things are a benefit to you if you're entering risk reversals right now to hedge your holdings. And another thing, if you are adding length up here, because you actually do believe in this supply-demand dynamic continuing, and you do think Bitcoin probably gets to 100K in short order, and you're actually adding exposure up here at all-time highs, then you'd probably be well served to layer on some sort of risk reversal against that that delta that you're buying, because you can sell like calls at 120,000 to fund protection. And you essentially still have almost 100% upside on your Bitcoin that you buy here, but you are hedged out pretty quickly if the market turns south. So a really, really nice, efficient way to buy extra delta here, but do it safely by layering a risk reversal over the top of it. Okay, so that's what these levels of skew are enabling you to do. Looking at the dashboards, we obviously see sell calls screening up here. We're looking parabolic in terms of price action. Vols have obviously exploded to the highs. So selling calls has never looked so juicy. But to be fair, I was saying the same thing last week. So, it is a mean reversion monitor. At some point, selling calls is going to work spectacularly. But in a market that refuses to mean revert, you can get your head chopped off selling naked calls. So I would never say sell naked calls, only covered calls here, but it's a great time to be putting on covered calls. And that is also the case in Ethereum. Similar story here. Obviously had a really good run. And in terms of vol carry, at least, it's not realizing as much as Bitcoin. Therefore, in theory, selling options on that looks even more attractive because of that super positive vol carry that we are getting. And you can see that here on our carry indicator, where you've got 87th percentile, and this speedometer type thing we've got here is quite positive right now, where you're not seeing the same thing in Bitcoin. Okay, so that is what our dashboards are showing. Make of that what you will. If you look at the flows, volume absolutely exploding in Bitcoin, 170% higher, at about $15 billion notional. This is all-time highs. Open interest also hitting all-time highs. Activity on both sides. We've got some protection buying here in the shape of put spreads, risk reversals happening in March. So some people taking my advice and doing risk reversals. Also, upside trading in large clips. The block trades were generally sellers. So as we mentioned, profit taking in that 60 to 70K area in March and April. We also saw some rolling of June upside to higher strikes from like 60K to 75K. And then this is all the block trades, but the on-screen activity was very much coming from the buy side, whether it's shorts covering, whether it's speculative fresh buying, but that's what's driving the curve much, much higher. And a large part of the volume that came in on screens. And that's why vols were much higher, even in the face of profit taking from what we call smart money, from the funds who are trading the larger block trades. So that's what we saw on Bitcoin. In Ethereum, we saw an increase of about 50%, but nothing paling in comparison to the Bitcoin spike. What are the main flows? We got call buying activity in 8th of March, of this Friday and next Friday. So still some speculative call buying in that 3,800 to 4,000 strike zone. We saw a large December call fly trading, where actually the client was buying two of the body, the 6,000 strike. So trying to buy some upside volatility there, but not really pay a lot of premium for it. That's how that trade kind of works. So it's really a vol trade more than anything, but basically saying that if Ethereum re-rates higher and vol catches a bid, then you're going to kick into some Vega up there. And then downside protection getting bought in the 32 to 3,000 range. Again, short dated expiries using March there to get some protection on the books. So not as exciting as what we're seeing in Bitcoin, but similar sort of story with some protection and some upside participation going on. All right, gamma positioning, that's pretty boring because it's really not about the gamma right now. It's about what's going on in the underlying. So both of these are now sitting at about neutral. So we had Ethereum drifting down towards neutral as we rallied to the sort of through the big 3,500 strike that seems to be the major dealer short strike. In terms of Bitcoin, we've got long strikes sitting at 65 and 60K. We have got some shorts in the middle of that, but in general, the positioning is very well balanced. So, there are bigger forces at play than gamma right now. So we don't really think the dealer gamma is telling us much of a story and isn't really going to be very predictive of what the hell Bitcoin or Ethereum are going to do over the next week or two. But we keep an eye on it, and if there is stuff to say, and if we do think it's going to have material impact, we obviously let you know. But certainly in this case, I do not believe it will. That's the summary for this week in crypto. Thanks a lot as always. I'll catch you guys later.